Hello and welcome to another episode of A Week Past Sunday. I'm David Hooks. Sorry this one's taken me so long. Now, there's been a lot of coverage recently of the Scottish rate of income tax, and specifically in relation to the Scottish Labour and the Liberal Democrats proposing to increase it. So, what is it, how does it work, and how can we decide if raising it is a good idea or not? Well, to fully understand the Scottish rate of income tax, we need to take a step back first and look at taxation across the UK. There are various types of tax. We have corporation tax, capital gains tax, VAT, stamp duty, or it's now known as land and buildings transaction tax, although that's already been devolved, excise duties, inheritance tax, and a plethora of others. The UK tax code is one of the most complex in the world, and even after an attempt to simplify it was made, it actually became larger. There is a tax for just about any way of making money available, as it should be. What is being devolved to Scotland, as part of the powers assigned in the Scotland Act 2012, which resulted from the Calman Commission, is a portion of income tax. Within income tax there are different types of income. There are earnings from savings, dividends, and the rest, which is called earned income, or NSND, which is non-savings, non-dividend. That includes pay from employment, but also profits from self-employment and unincorporated businesses, pensions, taxable benefits like job seekers' allowance, and income from property. Now, the proportion of income tax to be devolved is the NSND part, which makes up over 95% of the total income tax take. Now, for most of us that would be salary paid through PAYE, or pay as you earn, and your employer has your national insurance number and salary, they inform HMRC, and it's all done without you getting involved. This type of employment income makes up 72.6% of income tax in Scotland, with Scotland have a slightly lower rate than the rest of the UK at 73.7%. Scotland has a far higher percentage of pensioners contributing to income tax at 14% versus 8% for the rest of the UK, and lower percentages of other types of income versus the UK. Most of you will be aware of how income tax works, but basically you have a tax-free allowance, and anything above that is taxed at what's called a marginal rate. Our rates are 20% for basic, 40% for higher, and 45% for the additional rate, which is anything over £150,000. The marginal aspect comes from the fact that you pay the percentage of tax based on the amount of salary earned within each band. Worth remembering here is that if you are an additional rate taxpayer, the bands still apply, but you don't get a personal allowance. So for SRIT, Scottish Rate of Income Tax, in each band, 10% of income tax is being switched off and a reduction taken from the block grant. It's then up to the Scottish Government to set their own rate. Now, the SPICE report said that setting the rate above 10p would make the tax less progressive, and below 10p would make it more progressive. The block grant was then set to be reduced by an index method, but that will likely be replaced with the fiscal framework once that gets agreed. Some have argued that as the personal allowance is to increase again, which the Scottish Government has no control over, setting the rate at 10p will still amount to a tax cut, since some are taken out of tax altogether, while the basic and additional rate payers benefit from the increased allowance. As a result, most will see their tax bills go down. But increasing the personal allowance is widely recognised as being the most progressive method of reducing tax bills, and to combat that by using a less progressive measure could be seen as counterproductive, but it doesn't make it an invalid opinion. As of April this year, the bands and rates are still in the control of Westminster, with only the Scottish rate being set at Holyrood. That too will change once the new Scotland Bill is approved and enacted, but it's important to remember that only around 40% of income tax is being devolved at this time. In the 20% basic rate band, assuming the 10p rate is set, half of the tax goes to Scotland, the other half to the UK. For a higher rate, 30 pence goes to the UK, with 10% going to Scotland, and for the 45% bracket, that's 35p of tax still going to the UK, with 10p to Scotland. What this means is that the Scottish rate of income tax is a flat rate, but not a flat tax, as one SNP claimed. Remember, those on the additional rate still pay at basic rate as well, so although 30p of their tax at the higher rate goes to the UK, they still pay the 10p in both bands. However, it's also crucial to look at the makeup of the share of taxpayers by salary in order to fully appreciate the contribution made by each salary band. Scotland has a higher percentage of the 10 to 49,000 salary brackets than the rest of the UK, but at salaries over £50,000 the percentage is higher in the rest of the UK. Now, specifically when you look at the actual tax take across the UK as a whole, those on salaries of £200,000 and above contribute 20% of all income tax revenue, but in Scotland that figure is only 10%. The figures in this graph show that the tax take in Scotland is slightly skewed to the lower salary bands, and this is important to understand in relation to the effects of an increase or decrease to SRIT. The Scottish Government's argument about the relative percentage increase in tax paid for individuals on lower and higher salaries is somewhat fallacious. Regardless of the relative percentage, those on higher salaries would pay more in cash terms than those on lower incomes. That's just obvious. But what is also clear is that they would be far more easily able to withstand the impact. It's all well and good for some to claim it's only a small increase, but for those on low salaries, every penny counts. And Scottish Labour's proposal to increase the SRIT is in contrast to their initial position on it, where Jackie Baillie called it a blunt tool and said that they would not use the power. She claimed on Twitter to have sharpened the blunt tool with the supposed rebate. However, when questioned on it in Parliament, she lamented that all anyone wanted to talk about was detail. One would expect so in Parliament, yes, but there was none for her to give. It's all very well Labour making an emotive argument about kids not cuts, but with 7 weeks to go until the tax would be implemented and no idea how their rebate would work, it would be irresponsible to proceed. Labour's rebate idea is in contrast to the Liberal Democrats who simply wanted to raise the tax for everyone, but it suggested that even they realised the power itself would hurt those on the lower salaries. Increasing the rate to 11p would have incurred a £475 million payment from the Treasury to the Scottish Government. This would be made up of £345 million from basic ratepayers and £130 million from higher and additional rate contributors. This is almost a 66-33 split. Across the UK, the tax split by the same measure is 54-46. So the Scottish rate of income tax, by its nature and by the number of higher rate and additional ratepayers in Scotland, shifts the burden for tax collected towards the lower end of the salary bands. So while those on higher incomes would individually pay more, the lower paid, including the higher percentage of pensioners, contribute more as a percentage. SRIT is also a more volatile tax as shown here, and the figures up till now have all been estimates. It's only very recently that HMRC have embarked on identifying who is a Scottish taxpayer. I have noted before about the fact that figures apportioned through GERS are based on a sample of 80,000 UK taxpayers and a formula, but from April this year there will be much more accurate data on how much income tax is actually paid. A Scottish taxpayer, incidentally, is someone who lives and works here, or someone who has a residence in both Scotland and the rest of the UK, but who spends the same or more number of days in Scotland as they do elsewhere. So if you're someone who has a house in England but you fly up to Scotland for work every week, you're still an English UK taxpayer. But if you own a residence in both and spend half the year or more in Scotland, you're a Scottish taxpayer. One other thing to bear in mind before we finish is behavioural changes. For the vast majority of income taxpayers this will make little or no difference, but for those on the highest salaries there are options they can take that would simply negate any SRIT increase and mean even less was received. This of course would be repaid through a reduction to the block grant after a reconciliation which is due in 3 years, and mean that everyone loses out except the rich. Income can be brought forward, delayed, taken as shares, taken as dividend. There are many options, and those have to be considered when setting the rate. Having a different rate from the rest of the UK is not a bad thing in and of itself, but its effects should be thought through, not just flung together a few weeks before an election. Labour and the Liberal Democrats were right to raise the issue of taxation, and their goal of spending the increased funding on education was a laudable one. Raising taxes is not objectionable, and if done correctly it can be done with the full support of the public, but for local public services the source of funding should be the local area and the responsibility should be that of the local council. For too long the council tax freeze has been as much of an excuse for local government as it has for the SNP. Many have questioned whether it is now too late to increase local taxes, but the legislation for council tax freeze could easily be repealed, and if a party puts a proposal in their manifesto to increase local taxes as soon as they gain power and win, that mandate would be undeniable. A fair local tax that local government are responsible for raising and spending is surely far more progressive than a 1p increase in income tax, with an ill-thought-out rebate that would be expensive, difficult to administer, probably not even claimed by those in the most need, and potentially outwith the powers of the Scottish Parliament. That decision is yours. As ever, please read up on the reports that this is based on and make up your own minds, but I hope that this has been in some way helpful. Thank you very much. Good night.